Good afternoon. All right, we're going to get started. So whoever wants to join us, grab a seat. Come on down. This one's going to be good.
Hope so.
Yeah, this one's going to be really good. Okay, while people are trickling in, welcome to today's session. I want to make a quick introduction to a good friend of mine, Mr. Tony Joseph. And Tony is VP of Financial Services at T-Mobile. And he leads the strategy and execution of initiatives that expand the company's presence in financial services. And this is awesome because I'm actually a very loyal, happy T-Mobile customer, so this is a good moment. He's responsible for building and scaling customer-centric products, including co-branded credit card and banking solutions, aligned with T-Mobile's Un-carrier approach. And prior to T-Mobile, Tony held multiple leadership roles within Amazon Payments, where he led product portfolios spanning co-branded and private label credit cards, as well as broader loyalty and rewards programs. So in these roles, Tony was responsible for driving strategy, growth, and innovation across these businesses and contributing to the broader payments ecosystem. So Tony's experience spans payments, co-brand strategy, and digital transformation with a focus on building financial services solutions at scale and delivering meaningful customer value. So perfect person to be talking about building customer loyalty at scale. So thank you for joining us, Tony.
Thank you for having me.
All right, we're going to kick this off with a few questions, and really hopefully you can teach us a lot of how you and your career have executed on this strategy. But you know, now you've built financial products across two of the most really recognizable brands in the country, if not the world, right? What patterns have proven most durable? Like, tell us what's worked.
Yeah, that's a great question. So the way I think about it, any product that you launch, the single most important thing that you have to unlock is to identify unmet customer needs. So once you know the unmet customer needs, then you can figure out how do you uniquely solve those problems using companies' assets. So that's the single most important thing. Financial services is no different. So understanding what customer wants and figuring out how you can stack benefits and rewards for customers and drive loyalty is the most important part of launching financial services product. However, think from a customer perspective always. So what do customers care when they are trying to engage with the product? There are three main things that they care about. The first is pricing. What's the cost that I have to pay for getting the service or product? Second is what are the rewards and benefits, overall value proposition of the product that you have. And the third is experience. So if any of these three verticals are not sufficiently met or are not at par with customer expectation, most likely the product will fail. So in my experience with both Amazon and T-Mobile and every single product that I've managed, we've always begun the journey by understanding what do customers want and then figuring out how can you offer the best services, the best rewards, the best experiences by understanding what do company has to offer and how can you create that step function improvement in customer experience and drive more value to them. So begin with customers and stack on benefits and reward and never try to hide pricing and things in a hidden fine print. Always be transparent and upfront.
Yeah, and I was telling you this story earlier when you talk about like building that brand loyalty. I was at a conference this week down in Orlando, Florida, and one of your colleagues was there. And I was with him when we went to register. And the young lady that was helping him register, when she saw that he was from T-Mobile, literally came around the desk and said, "I love T-Mobile Tuesdays," and gave him a big, big hug. Like, she was so excited. And so T-Mobile's done a really good job at doing that. It's pretty incredible.
Yeah, so in line with what you're saying, like for T-Mobile Tuesdays, the travel dining program, the entertainment. So success for a financial product in a company like T-Mobile is how do you make the experience of T-Mobile customers interacting with financial services better? How do you stack these things together such that there is a step function improvement in the overall value for customers? So it makes sense. So it has to be a win-win scenario where companies win when customers win.
Yeah, no, that's great. So really, truly successful products leverage what's unique about the company. And T-Mobile has an existing relationship with tens of millions of consumers. And it's really built on the connectivity that most financial services companies just don't have. Like, it's a very unique value proposition. So how do you turn that into a competitive advantage? And then how do you amplify that with AI?
It's a great question again. I think when a company like T-Mobile gets into a business like financial services, the biggest benefit the company has is distribution. Customers are already interacting with T-Mobile. We've built a brand for many years. Customers trust us with their wireless service, their broadband service, which are like integral part of the customer's everyday life. So customers are already interacting. Then how do you introduce financial services products within these journeys where customers are already interacting with us? So companies like T-Mobile, Amazon, or other big retailers and other big providers, the single most biggest asset is distribution. So how do you maximize those things? However, in today's world, AI has come in and kind of changed the experience and the expectation that customer have. A customer today wants different thing than a customer 10 years ago. Today, the customers want to get in, interact, transact, and go do other things. So the time that you have with a customer is minimal. So AI really helps maximize those things. One thing I always say is no two customers are alike. So the power of data. So T-Mobile, because we've had these tens of millions of customers, we have their interactions, we know how they pay, we know their general credit profile, we know what are the services they buy from us. Knowing these things helps us do predictive modeling and understand which product at which touch point makes sense. For example, if customer is trying to buy a phone and has a big down payment to pay, at that moment, a financial product that reduces the out-of-pocket expense for the customer and gives them incremental rewards makes sense. It's a no-brainer. It makes sense, offer that product. But when a customer is trying to buy a phone, if you sell a completely different product, completely outside it, then what you end up asking is attrition, you can have drop-offs. So AI really helps us harness the power of data and put the right product in front of the customers at the most opportune moment. So overall improves the conversion rate for customers.
Yeah, and the opportune moment's a really key one. And you know this, I switched from my previous carrier I was with since 2004 to T-Mobile just a year ago. And it was interesting. I was blown away. Where we live up in the mountains, we have one internet service provider. And it goes out at least once a week. And after about 3 months of being a T-Mobile customer, I started getting offers to try the broadband. And I'm like, there's no way it's going to work where I live. Nothing works here. Long story short, I got this offer to try it 60 days at no cost. And it's incredible. It works better than the one solution I had access to at the time. But it fascinates me as we've been talking about this. Like, T-Mobile knew. They knew me and what was going to resonate with me and my life.
Yeah. So T-Mobile, in our journey, we built this unique asset called T-Life, which is our digital app where customers interact with us. So now that all product services and all customers are digitally active, it gives us that opportune moment. We know that Mitch stays in a place where our broadband service works well. How can we provide Mitch a service that he wants at a cost which is cheaper? So pricing, value proposition, and experience. How can we manifest it in such a way that customers like you understand the value and get the returns that they expect? And T-Life as an asset, data, AI enables us to do it.
Yeah, no, that's great. So I think today, especially AI being such a hot topic, I think most companies are really experimenting with AI, but very few would actually say they've truly figured it out. So what gave you the clearest signal about where it would actually matter for financial products? And where has the reality been more complicated than what you anticipated?
Yeah. So when you think about financial services products and when you think about the customer behavior, the biggest place that AI can help is how do you eliminate those high friction moments. So any business that runs has data to see where do the maximum drop-offs happen, where are the friction points in the customer journey. So what in principle should happen is AI should enable us to predict what the friction points are and offer services and experiences that helps navigate it or use the harnessing the power of data. So that should be an intuitive experience. However, financial services, different from other spaces, is highly regulated. There is compliance. We have to be transparent. And every single interaction, we have more responsibility than some of the other businesses out there. So where the industry is evolving is how do you use AI in a responsible way? And how do you make sure that you're using the customer data fully well, letting the customers know that we are using it, and coming up with those unique moments where the friction can be eliminated. One good example is if a customer is interacting with any retailer and doing a high basket purchase, at that moment, what does the customer need? Customer needs an opportunity to be able to split payments across multiple months or get rewarded for what they do. So in those moments, when we know the customer is going to reach at that moment, AI helps us run through the different offerings, run through what the customer wants, get a snapshot of what the credit profile looks like so that we are offering the right customer the right product. Someone who's new to credit, if you offer them a annual fee premium credit card, it doesn't make sense because the probability of decline is high. So how does AI help increase the probability of approval by knowing more about customers? And that's, I think, the next evolution of financial services.
Yeah. No, that's great. So you've built across a pretty wide range of financial services product types. And really kind of it goes back to your former company, loyalty programs, you've done credit products, deposit accounts, lending. So looking back over your career so far at what's really worked, what are the common threads that you've seen? And where have you been surprised by what didn't translate in those experiences from one to another context?
Yeah. So my experience and more broadly in financial services, there are two things that are very important. One is customer simplicity. So customers need to be able to understand what you're offering, what they are getting. And the second is financial sustainability. So where I have seen many products not work broadly in the industry is they create a really good product, but they don't manage the financial sustainability of it. So what ends up happening is the customers love the product, they interact with it, but the parties offering the product eventually understand it's unprofitable and then have to change the value proposition or increase pricing. When that happens, it's a headwind for customers and they naturally attrite from that product and they go explore other products. So knowing fully well that these customer interactions are going to give us a sense of responsibility. We are responsible to our customers, making sure that their unmet needs are solved, but we do it in a right way and make it in a sustainable, profitable way is the most important element. So I think if one thing that you want to remember from this conversation is customer experience, but do it in a profitable, long-term, financial, sustainable way.
I mean, you talked win-win previously, yes. Right? And I think
it's like a win-win scenario. It has to be a win for customers, but it cannot be a lose for company because then it doesn't work longer term. So it has to be a win for customers and win for the company.
And how are you guys balancing AI to figure that out?
Yeah, it's a great question. So how we are typically using AI is in T-Mobile, for example. We have millions of customers who interact and use our service. As naturally with having such a wide customer base, there are intuitively going to be experiences where customers want more or have a question or have a negative experience that we need to solve for them. So if you look at what we are doing, and we have publicly spoken about it, is investing in a vertical called as Intense CX. What that basically does is try to understand a problem that a customer has and use that data to preemptively understand when the customer will call us. So either solve it through a human or use a chatbot services to proactively tell customer. For example, if there is a natural disaster happening and network is being lost or it's spotty and a customer is naturally going to call us. So proactively we know that and we let customers know that a service is going to be spotty, it's going to resume. And we're using AI in like different parts of our network to make it more intelligent as well.
Yeah, I mean, it's a good point. And again, from a T-Mobile customer's perspective, I have two of my younger kids. I have 5 kids, which is insane. But 2 of my younger kids, I actually log into the T-Life app to track where they're at with their T-Mobile watches. And it's been fascinating to see every time that I'm doing this, and it can be up to 5 or 10 times a day. Sometimes I'm logging into T-Life. A lot of the times I'm being given options or opportunities for very relevant things that are important to me, right? Things like T-Mobile Tuesdays getting free movie tickets. We had a big snowstorm this past year. I think it was like one of 2 we had in Utah this entire winter. But I remember I got an alert that was saying that the network coverage could be impacted, just to be aware. So it's like going back to that, that's a critical message for me to know as a customer, because if something happens, T-Mobile's already alerted me about it.
That makes complete sense. So that's where relevancy to customers and proactive communication always helps.
Yeah. So every financial product has a moment where the customer has to actually commit and follow through, right? Move money, fund an account, make a payment. How much does that moment really matter to the overall success of a product? And what separates experiences that build confidence from ones that erode confidence?
So that moment is very, very important, because financial services oftentimes for customer is emotional, it's personal, and it's oftentimes very stressful when you're trying to make a decision on, should I open up a credit card? Should I take a new loan? What insurance product do I offer? So in these moments, what really stands out are 3 things. So if you tell customer what's happening, if you let customers control their experience, and if you deliver value transparently and instantaneously, these are the 3 important vectors that help customers take that decision to take the product. Conversely, where products fail is when the customer is in the final step, you're introducing friction points, ambiguous terms and conditions, like fine print, which has hidden costs and hidden fees. In those moments, there is erosion of trust, which actually leads to customers questioning even your base service or your core business is what they trust. So always understanding customer is important, let them control their experience is the single most important thing to convert that. And yes, that step is super crucial, because if you create the best value proposition, but customers don't actually take the final step to adopt the product, then it doesn't work. And that flywheel of customers coming in and using the product more, benefiting from it, unlocks more value to them. That message can only go so far unless you have the best experience.
Yeah. And what are some examples that you've seen, not necessarily you within the 2 most recent companies you've been at, but just overall, where you've seen where it's eroded your trust specifically, where you've gone through an experience and you've thought, gosh, I'm not coming back to this one again?
Yeah, so me and many of the customers are expecting the best experience today. AI is a big part of it, technology is a big part of it, and as Zach was talking, COVID made all financial services evolve in their experience. So I think, for example, one very good example is when you apply for a credit card, previously, 5 years ago, you would have to wait 7 to 10 business days for the card to come on mail, and then you use the physical card, you activate it, call a number, activate the card, and then use it. Today, the successful credit card products are doing instant decisioning and instant provisioning. What that means is a card gets approved within seconds, and customers are able to use a digital card instantly at point of sale and get value right there. And that's the power of technology. That's the power of AI. It's that constant feedback to customers and meeting them right there is what works. And if it doesn't, if there are providers who do not give that instant gratification, then they lose me and many other customers.
I mean, can you imagine today if you went to go apply for a credit card and you had to wait 7 to 10 days for it to arrive?
It would be, and believe it or not, there are providers where it takes 7 to 10 business days, but that's where investment in those critical customer touch points will be game changer.
Yeah, no, I fully agree with that. So customers today really expect what I would call hyper-personalization. And really they notice when you don't deliver it. And so it's kind of like talking about provisioning of the cards, right? You apply for a card, it should immediately be in your wallet. You can tap to pay right there, even if you don't have the physical card. So how does that raise the bar for financial services in general? And how do you think about using AI to meet customers where they actually are, rather than where the industry assumes they are?
Yeah. So I hear every single financial services company talk about personalization. But what sets the people who are winning versus people who are struggling is understanding what personalization means. So Mitch, for you, personalization was broadband and T-Mobile wireless service. For me, it could be something completely different. So personalization is not a one solution fits all. No customers are alike. So what AI enables us to do is process high volumes of data, understand the patterns of a customer versus customer A to customer B. I, for example, Tony, upgrade my phone every year. Mitch may not upgrade his phone for every 3 years.
I still have an iPhone 10.
So there you go. So understanding what each of us is looking and what we are interacting with is of paramount importance. So personalization means different for you than me. And AI helps us understand and narrow down those moments. Because as AI becomes more powerful, customers become more digitally active, the number of interaction points are going to reduce. Because people are going to use AI to get to from the last point without going through multiple hoops. So as these number of interactions are going to naturally diminish, personalization becomes critical to be top of mind for customers and help them reach and understand things that they don't even know they want, but add more value to those journeys.
Yeah, and I think back to 12 months ago when I became a T-Mobile customer, I had switched from my former provider to T-Mobile in less than 10 minutes. It was so simple. And again, I was surprised at just how much information T-Mobile was able to glean on me as an individual to cater the experience and tailor it to what I was looking for. And I compare that to a couple of years ago. My parents are both in their 80s, and we switched from one provider to another. Gosh, we had to go to the store like 2 different times. And I mean, maybe it was because they're in their 80s, but I tend to more think it was the provider that just hadn't caught up with T-Mobile yet, and that experience wasn't there. So it eroded trust from my perspective, because then when it was time for me to start to look to switch, there was no way I was going to that other provider.
Yeah. T-Mobile launched something called as Easy Switch, which enables that 10-minute experience. And for some customers, it's faster. You can bring your phone, you can move your lines, you can port your numbers, all from the comfort of your home, digitally active through T-Life. And that, again, is a friction point that data, AI, technology is enabling.
Yeah, I mean, that's the big thing, is you're using AI to really power that experience and build that loyalty with your customer base.
Absolutely.
So building a portfolio where each product really deepens the relationship with the consumer and makes the others more valuable is something really also entirely different, right? So how do you think about sequencing across use cases? And how do you make sure growth is profitable rather than just expansive?
I mean, let me answer the second part first. How do you make sure growth is profitable? So each financial services products has different unit economics, right? Like a credit card has different unit economics which propel the overall financials. Like a debit product has different economics that powers the financials. So each product has to be designed to be profitable long term on its own. Now, going back to your first question, how do you create a portfolio of products? Again, it's all about the customer need, meaning if I only launch a co-branded credit card which has requirement of greater than 700 in FICO score, that's not going to solve the problem for all the customers that I have. So it's identifying where customers are in their life cycle and then figuring out what product works for those customers at that time is going to be very valuable. And how can you stack these things? Meaning, let's say someone is new to credit, you offer them a product which is tailored around new to credit, but as they improve their credit or as they become more financially savvy, they may need other products. So upselling or graduating these customers from one product to the other product creates that flywheel effect, which can build annuity and maximize the long-term CLV, the customer lifetime value for the company, and also gives value to customers.
And following them through that entire life cycle. I think that's a really critical point. I know in the telco space, churn is that's a really big data point that you guys look at. And so if you do it right from the first interaction, then ultimately you have a customer for a really long time. And again, T-Mobile's figured something out with hundreds of millions of individuals that you serve on a regular basis. It's pretty incredible from the outside looking in to see how you guys have done that.
Absolutely.
So let's talk about how financial services really, and just in general as an industry, we talk constantly about loyalty. But mostly it's measured through retention rates and engagement scores, things like that. So what do you think the industry fundamentally misunderstands about what loyalty actually is?
Yeah, this is a very interesting question. So I think where the industry fails is they equate loyalty to churn rate. If you manage the churn rate down, you assume the loyalty is good. Actually, it's the flip. Churn rate is an output, but what you really control is experiences, value, provide them the service that they really like so that they don't have the reason to churn. Understand what the customer wants, provide them those services. If they have a negative experience, try to resolve it in a way that is less ambiguous and more clear to them. Enables more loyalty. So you can solve this by rewards, benefit, providing the best service, the best experience, best value. So there are multiple different vectors which influence the customer's perception, and that is loyalty. And if you do all of those things correct, then you can control the output, which is churn. So in my mind, industry often looks at the wrong metric as opposed to all the controllable inputs. And lastly, what I would say is, loyalty is not whether the customer stays, but it's actually if the customer will choose you again. And that is how you can influence by giving the best experience to them.
That's a great one. I appreciate it. Well, Tony, thank you. We appreciate you imparting your wisdom upon us here. And really kudos to what you and the team at T-Mobile have built. It's truly an amazing brand. And I speak personally as a customer of T-Mobile. And we appreciate you having us here today, or being with us here today at Effects.
Yes, thank you for having me. Thank you, guys. Thank you.